Ira Epstein of Linn and Associates with your metals market update for this Tuesday, and we are now on the 28th of May, 2019, just after 4:30 p.m. Central Daylight Time. So a stock market that's getting hit. I am not surprised. I still think it's that sell may go away that I so often talk about on TV. I don't think that's necessarily a bear market. I think it's a market that you're so close to the top, what's going to push the market higher is what bothers me. And why are interest rates going one direction, down, 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 with inversions taking place, which often is a prelude to a recession, on average 14 months after that occurred. And we've already seen this inversion once in the past month or so. In the gold market, the problem hitting it could be deflation. You heard what I just said, deflation, not inflation, the opposite. I am just, with all the trade wars that are going on and everything that's starting to take place, I think that deflation word's going to start popping up in a lot of different places. You wait and you see if it's going to happen. Dollar very strong. Who would have thought the dollar's this strong this early on in the year? We're in May, and if I go back to December and I show you the reports as to how many people were talking a down dollar, that was the trade of the year. Wow. I gave up writing those type of reports years ago because I'm rarely right. When I look at the market, I still see a down thrust. I see a market that has downside bias because it's under the 18-week average, and this is a weekly chart, and I still see a down thrust in the market. When we take a look, I've moved to the August gold. So you're no longer in the June. Why should we trade June? We're at the 28th. You're going to get possible delivery in 3 days. So let's switch gears, which we did. Well, when you look at the chart, you see the failure you just had here. The question is, what does it do on the swing line? Well, the swing line on the June gold turned down, but not on the August. The August still has higher lows, higher highs. Interesting. Battleground, 18-day average of closes in red. And that's so often where a market fights a battle, where it tries to figure out what it's going to do. The 100-day average is way up here. So therefore, where's support? Well, one of the numbers could be the Bollinger Band. And the lower Bollinger Band comes in the August gold right here at 1270.280. To hit it, you have to break the uptrend line from the last swing line, which was 1270.750. So it's about $4, $5 under that number. I see resistance right here. What would trap the people that are trying to be bearish and put the market up? Take out today's high either on Wednesday or Thursday, and I'll call that a bear trap. Now, a bear trap occurs the way I teach in my charting course. If you take out the high of an outside day down, you look to see where the closest moving average is. Well, the closest on this chart is the 100. Therefore, the Bollinger Band's in front of it. That becomes the potential. Doesn't mean it has to get there, but 1306 would be the number. So at least there's a plan if the market takes off to the upside. When you take a look at momentum, it's turned down. So what I have here is a market with downside bias, because I define bias as the way that you close in relation to the red line, the 18-day average of closes. That's down. The swing line is up, momentum is down. When I step over to GLD, we have a pattern of a lower low and a higher high. 2 days last week, it fought at that 18-day average. Today, it started to give that back. We're certainly not in a trend, but we have bias to the downside, momentum trying to turn down. You'll see how today it started slipping back under the dark line. When we come to GDX, you have a pattern of a lower low, higher high. For a change, it didn't hit the 18-day average of closes. I think I've been telling you all last week, watch this sideways action. This market's trying to point down, momentum's down, bias down, but it's not a trend. Even if you take out 2026, it won't become a downtrend. You're stuck with a higher high and a lower low. I still see a sideways market. Now, the gold-silver ratio, I've still got the June gold up. I'll use that in the gold-silver ratio temporarily. You're up to new highs on this move. You could be going even higher. I heard somebody talking the 100-to-1 ratio. It could be whatever it is. All I care about, and I think my work's done a nice job of it, is when you're over this red line, the bias favors Gold. It means you need more ounces of silver to buy gold. The other part that's working with this, you got a trade war going. Copper, platinum, palladium, they can get their bounces, but who needs the stuff when you've got trade wars and slowing world economies? You got two elements there. When we look at silver, I've got a pattern of bearishness, lower highs, lower lows. Now that happened today. Prior to that, we had a market that was trying to make its down. It came up today just enough to confirm that down. And where do you think support is? I think it's at 1425 or just slightly. On 1425.90, the Bollinger Band, you just missed it by 0.6 cents today, 0.6 of a cent. So you're very close to where I think the pros are covering against that number because you're oversold. That doesn't mean you can't go lower. But the first challenge after that type of action, I expect to see that. In the copper market, copper's fascinating in what it did. If you take a look on Friday, you still had both numbers embedded. In other words, everything was trading under the 20 level. Today, you lost that. When is the only time you can regain the embedded reading? The only time you can get it back is the day afterwards. Now, one of the tricks I look for is where in the range did you close? And when you close near the bottom of the range and you just lose it, when you reopen often, the word is often it regains that. If it's in the bottom part, if it's at the top part of the day's range on the day it loses it, it's rare that it gets it back. Got it? It's just another one of the little tools. But I teach a lot of this in that course. In the platinum market, you've had these big spike lows with an embedded reading. You're bearish as can be. This market has not let go in any manner at this point in time. You'd have to take out today's high on Wednesday or Thursday, since it's an outside day down, to get me thinking, too much to the downside, maybe it's ready to rally back into resistance. Barring that, that's where I would expect the pros are keeping their stops. The palladium market is fighting a battle at the 18-day average of closes. It's got a lower low, a higher high. It's now gotten itself into overbought territory. I see formidable resistance between the Bollinger Band and the 100-day average. I just wouldn't be surprised if it keeps spinning here. It's almost a function of the platinum-palladium spread that it's going with. Last, in the dollar index, you have a higher high, lower low. I want you to concentrate on basically the sideways action of the Bollinger Bands. That's what the market's caught in right now. So if you're looking for a trend out of this, we got to wait for it to develop. Should you take out right here, this low of 2 days ago, which was 97.41, I could then argue that you'd have lower highs, lower lows into a downtrend, looking possibly at a challenge of that 9,700 level. As it is right now, unless that happens, resistance is back at 98.03. So you hear me talking about my charting course, and understand there's a couple of times a year that I put it on sale, and that's it. Otherwise, it goes either up in price or back to the old price. My course is running $169.95. I've got it on sale for $99.95. And it includes my 54 videos. You see what I do in a video, you do the same. And it's intentionally old data. Then in the morning, what we are going to do is you're going to see a live video. You're going to have your charts with the actual data coming through it. Then I'm walking you through the daily chart. So you can see how I talk about swing lines, window envelopes that you don't see here. You're going to learn all these different studies, 5 different ones, each one meant to be a filter on the other one. And when they say go, you go. When they say don't go, you don't go. Do some of the trades lose? Absolutely. If you're looking for something to walk on water with, this isn't it. In fact, there's nothing. The only thing I can tell you is you learn the discipline and you learn money management. Money management is as important as any other tool you're ever going to have. You got to learn to hide the name of the chart. Don't look at the name of the chart. Look at the chart. Do you understand that difference? So many people, they'll look at a market, oh, the weather's this, I'm bullish. Oh, no, look at interest rates. And get away from that. Look at the raw chart and decide what to do. And I teach you all that with all this different part of it. So you have two different types of charting software that we offer. Java, window-based. You also have your mobile phone that comes with all this. Then you get the morning videos, which by itself, by the way, is about a $15, as you know, every 30-day period. My research is $60 a month. The charting software is worth almost $100. I haven't put in what the value of the videos are. You get the point. $99.95. This is going to end this week. How do you get it? Either call us, go to our website under the word education, read all about it, and it's got a small video on it, and you can make your decision. For $100, learn a trading discipline. That's up to you. I hope you go with it. I'm Ira Epstein. You have a good day. I'll see you tomorrow.